What is up people, welcome back. Let's talk about Nano in this video, ticker symbol Nndm. So the company is set to announce its Q2 earnings on 18th of August. When the stock was trading at all-time high, about $16 or $17 per share, my position on this stock was about nearly 200% up, okay? That's 200%. And now as the stock is down more than 60% from its all-time high, my position on Nano is on red. I'm down about 7 or 8%, okay? So today in this video we're going to look into the company's business model, the growth potential, the risk to invest in this company, and finally there will be a price prediction that I obtained during my research, and that will include my personal opinion. If you have invested in this company, let me know in the comment how many shares of Nndm you currently own. Before going on, let me say this, I'm not a financial advisor, so anything I say on this video should not be taken as financial advice. You have to do your own research before you invest. If you like this video, make sure you subscribe to the channel and also give a big thumbs up for the YouTube algorithm. Don't forget, you can get a free share worth up to £100 using trading 212 if you are from UK or any other European countries. The link is down in the description. Go through the link, register, and then deposit at least £1. You get one free share, I get one free share, which may be worth up to £100. And as always, investing early is the way to become rich. So Nndm is a 3D printing company based in Israel. Its business model is pretty much similar to that of Nano. The company has a flagship product called Dragonfly LGM 2.0, which is a printing machine, and that costs about $250,000 to $350,000 per unit, okay? According to the CEO, the company has three sources of revenue, right? So the first source of revenue is of course selling the machine, and also similar to Nano, the company provides the machine on rental as well. So the second source of revenue is from servicing the machine. Whenever the company sells the product, there will also be a service contract on an annual basis, and that enables the customer to get updated with the latest version of both hardware and software. And it is important because it's another source of recurring revenue. So the final source of revenue is exactly same as Nano, which is consumables. The company also manufactures the ink for the product. So whenever the customer buys the printing machine, they will also have to buy the ink, okay? And that is another source of recurring revenue. Now let's watch the strategy of this company known as 3-axis.
One direction, serious investment. One axis, serious investment in product development and R&D. Accelerated much faster than most of the companies around us in the industry can afford. If we spend $50 million to $80 million on R&D since the company was established, 5 years, we're going to spend close to that per year. Not so much, but close to that over the next 3-4 years. One axis. Second axis, we're going, as we advance with this product development, to build channels to market and to expand and push forward our marketing strategy, our sales, to be able to be in 3 markets at once. Third axis, M&A, acquisition. Acquisitions shortens our time in the other 2 axes, because if I buy a company that has a distribution channel that goes to the market, instead of building it, I do pay for the company, obviously, but I am getting the distribution channels immediately after the acquisition and the merger, and I don't have to work over 2 years to build it. So we're going to do acquisitions that will accelerate our time to market.
So the COVID-19 pandemic seriously affected Nndm. As a result, the company had less than $1 million in revenue for the first quarter of this year. The company reported revenue of $811,000 in the first 3 months of the year, okay? That clearly shows the company was able to sell very few printers in the first quarter of this year. But now with the restriction easing, I think the company will make significant progress on sales of their product, which is very important because that will create multiple sources of revenue for this company. So the company currently has massive cash position of $1.4 billion. That is almost equal to their market cap of $1.6 billion. With such a huge amount of cash, the company will aggressively invest in research and development of their product and technologies. And according to the company, there will be next generation of Dragonfly 3D printer by the end of 2022 and another one by the end of 2023. And I think there will be no share dilution for at least next 2 to 3 years because the cash position is such a huge. So Nndm acquired 2 companies, DeepCube and Nanofabrica, as part of their M&A strategy. And we expect more of that in the future, okay? So the company will be burning a lot of cash in the future. So there is a massive opportunity for Nndm. According to that article, 3D printing industry will grow at the compound annual growth rate of 29%. That is absolutely huge compared to 10 to 12% of average return from S&P 500. Personally, I think Nano Dimension will massively outperform the industry. But if I being conservative, and I think that the company will do just a little bit better than the industry. So if I use compound interest calculator to calculate the gain in 5 years, let's say if I invest $10,000 in Nano Dimension today with 30%, just about a percent more than the industry for the next 5 years, and if I hit $500 in monthly basis, then that will make my return to 71,993, so almost 72,000. Okay, plus my investment of 40,000, my total worth will be $111,993. So that is still massive. Okay, nearly 200% gain in 5 years. With that being said, there is always some risk when investing in stocks. So does Nndm. The company is hardly making any money in revenue, probably due to the pandemic, but also in the past, the company's performance has not been up to the standard. You can see here the highest revenue they made in a quarter was Q3 2019, where they made $2.24 million in revenue. And then in 2020, you can see the revenue started to tank. You can see in first quarter only $700,000, in second quarter only $288,000, in third quarter $438,000, and in the fourth quarter of last year that was much better, $1.97 million in revenue. And again in the first quarter of this year, the revenue dropped to $811,000. It is always risky to invest in the stock which is trading at staggeringly high price to sale ratio of 201. Okay, there is a lot of company in the industry who is making tons of money in revenue and is way cheaper than Nano Dimension. So I absolutely agree there is a massive risk of investing in Nano Dimension. At the same time, I think there is a massive upside potential in Nano Dimension. The company will definitely have to prove in the upcoming earnings. I think it is too early to give up on Nano Dimension right now. Personally, I'm going to wait a few more quarters, at least 3 to 4 more quarters, and let's see how the company will perform, especially the sales of their printer. Alright, so finally let's talk about the price prediction for Nano Dimension stock. There is no any price target for Nndm stock in tipranks.com, so I found the price target on this website, which is gob.capital, and the price target for Nano Dimension for the next 12 months is $13.26 per share, and for the next 5 years is $68.14 per share. So if Nndm stock hits $13 in the next 12 months, that will be 100% return from current stock price. Amazing. I will be happy with that return, and if the Nndm stock hits $68 per share in the next 5 years, that will be 1000% gain in 5 years. Absolutely, huge. I will be more than happy with that return. Alright guys, that's it for today. I hope you like it. Thank you for watching till the very end if you are still there. Okay, and if you really like this video, consider subscribing to the channel. Invest safely as always, and see you in the next video.